Welcome back to Profit Path. In today's episode, we're diving deep into the latest market moves, alphabet jumps, gold eases, and futures flash mixed signals. And as always, I'm here to guide you through the day's top stories. But before we dive in, hit that subscribe button, it's free, and you won't find a more insightful or entertaining stock market brief anywhere else. Okay, let's jump in. Markets are shifting gears today as key economic reports approach and big tech plays make notable moves. Let's start with the futures. Dow E-mini futures dipped 0.1% to 35,606, while S&P 500 and Nasdaq futures edged up about 0.1% each. This subtle shift in sentiment is a direct response to tomorrow's crucial jobs report. If the numbers impress, we could see the green light for an interest rate cut next month. If not, well, the market's positive momentum might just hit the brakes. And here's a quick glance at today's top movers. Alphabet, the parent company of Google, rocketed up 9.1%, touching a fresh record high after a US court struck down a $114 billion antitrust lawsuit. This legal victory not only sets Google in the clear, but also boosts the entire tech sector. In fact, shares of Google have been on a tear lately, gaining nearly 15% over the past 5 trading days. That's a clear signal of investor confidence in the face of this ruling. Apple also saw some impressive action, climbing 3.8% after news that Google will be the default search engine on Apple's upcoming mixed reality headset. This deal, reportedly worth billions, underscores the growing influence of these tech giants. On the flip side, we saw United Airlines sink nearly 5% after cutting its quarterly profit forecast due to higher fuel costs. And Netflix, well, it's down about 2% following a less than stellar earnings report yesterday. Now let's turn to gold. After hitting all-time highs on Tuesday, it's taking a breather today, hovering around $1,080 per ounce. A slight dip of 0.3% is not a cause for concern. It's actually quite normal after such a sharp rise. More importantly, the overall trend remains bullish. Markets are practically pricing in a 25 basis point rate cut by the Fed in September, with a 97% probability according to CME Group's FedWatch tool. Here's how it works. The Fed signaled that they might skip a rate hike in their next meeting. This move is partly due to cooling inflation and partly to give the economy a chance to breathe. Now, markets are betting big on this. They're saying not only will there be a pause in rate hikes, but also a cut of 25 basis points in September. This expectation is so strong that the market is already pricing in 2 rate cuts by the end of the year, hinting at a possible recession in 2024. Let's shift gears and explore international markets. Asian stocks are stabilizing today, finding support from recent Fed comments and the release of the US job openings data. This data showed a surprising drop in job openings in May, reinforcing expectations of a Fed rate cut in September. The MSCI Asia Pacific Index, a broad gauge of regional sentiment, rose 0.2%. Key players like Australia's ASX 200 advanced 0.8%, while Japan's Nikkei climbed 1.2%. However, China's Shanghai Composite bucked the trend, sliding for a 3rd consecutive day amid regulatory caution surrounding private tutoring firms. Alright, here's what I'm watching. Despite the overall positive sentiment, traditional sectors like financials and energy are still lagging behind, gaining only around 1% so far this year. On the flip side, tech is leading the charge with a robust gain of 16.5%. The question is, can this momentum spread across sectors, or will the broader market remain cautious? My eyes are on this Friday's jobs report. If it comes in strong, it could give the green light for a rate cut in September. But if it disappoints, well, the market's current positive stance might just reverse. And that's where you come in. What do you think? Will tech lead the markets higher, or is it holding the rally hostage to the upcoming jobs report? Drop your thoughts below. And remember, to stay informed and keep thriving in the markets, hit that subscribe button. You'll get a daily stock market briefing right in your inbox every morning. It's free and it's the smart way to start your day on Wall Street. Thanks for tuning in. Have a profitable day, and we'll catch you back here tomorrow.